As always, there's a lot going on in the world in terms of the economy and markets. And today we zone in on a couple of specific issues. We take a closer look at what an uncertain Brexit situation means for the UK economy. And the EU Commission has downwardly revised growth in the EU. We ask why these economies within it don't seem to be gaining the necessary traction to grow. And of course, we get a specific view on South Africa. I'm joined on the line by Lukman Otunuga. He's a currency and market analyst at FXTM. Thanks very much, Lukman, for joining us on the show. The temperature appears to be rising between the United States and Iran, with the latter threatening to sink US ships and US military bases. How seriously is the market taking this? And have we seen any translation of this tension in the oil price?
Thank you for having me here today. Yes, I would have expected this development to spark risk aversion across financial markets. Now, given how global stocks today remain green and safe haven assets such as gold are unchanged, this has simply been shrugged off. I believe markets seem to be building some sort of immunity to such headlines. Now, I don't know if this is a good thing or a bad thing. Looking at all markets, all prices are higher today, but this has nothing to do with this development, but the fact that we're seeing the dollar weakening thanks to Jerome Powell.
And what did he have to say? Do we know?
Oh, yes. So the reason why the dollar is weakening today is because Powell actually, as markets did not expect, signaled that the Federal Reserve will actually be cutting interest rates this month, surprisingly.
Oh, right. Okay. Oh, no wonder markets are up in positive territory today. That makes sense.
Yes.
So the UK has experienced a little bit of a diplomatic boo-boo with the United States. The British ambassador described President Donald Trump in an email as inept and as delinquent and lots of other quite negative things. And President Trump proceeded to call him a very stupid guy. And now we've learned that the ambassador has now resigned as a result of this. Any concerns on these type of developments?
Yes, this will certainly add another element of uncertainty over US-UK relations. But at the end of the day, investors have bigger fish to fry. I think it's all about Brexit. You know, Brexit has made the pound a sick man in the G10 space, and it's actually negatively impacting the sentiment in the UK. So while this fresh development does add to the terrible themes hitting investor sentiment, I still believe the focus still remains on Brexit and what it actually means for the United Kingdom.
And what is happening with Brexit at a political level? I mean, not that long ago, the Conservative Prime Minister frontrunner Boris Johnson was on record as saying that no matter what, the UK will leave the EU by the 31st of October, and that is whatever happens. Is that rhetoric still going on? And also I've heard rumours about a possible referendum, but that's always been a rumour. What's happening?
Yes, the political risk circus in Westminster is giving investors and analysts like myself a headache. It's just back and forth. Now, when we're looking at the pound's weakness is actually derived from concerns over the UK crashing out of the EU with no deal in place. And these concerns are being fueled by speculation that Boris Johnson will in fact become the next Prime Minister of the United Kingdom. We've had reports of Jerome Corbyn saying that, yes, he wants a second referendum, but we have to keep in mind that, number one, this will take a lot of time. And number two, the other part of the equation is, will the European Union allow the UK to extend the deadline beyond October the 31st, given the constant back and forth of Brexit? I mean, it's been over 3 years since the official Brexit, and we're still nowhere. We're still at point one. So this is actually an open question, and the answer is actually a complete mystery. For now, though, I believe markets should take this step by step, with the first important date on July 26th, when we'll know who the Prime Minister will be.
Yes. So despite a report showing that the UK economy grew in May by a mere 0.3%, there are big concerns that Brexit may scupper any potential growth going forward. Just tell us about those fears.
Yeah, today was very good when I saw that UK economic growth was has expanded by 0.3%. This was a welcome development and did ease some concerns over the health of the UK economy. However, when we look at it in a bigger picture, nothing much has really changed. Yesterday we had retail sales reports from a private agency that showed that retail sales has actually been the worst June on record. Retail sales fell 1.3% this June compared to last year June, which was around 2.3%. So when we keep in mind how consumption is a major engine for growth in the UK, the fact that consumers are not spending due to Brexit does signal red lights. I still think that the Bank of England is going to remain dovish, and we have to keep a close eye on economic data this month. We still have average earnings, inflation, another set of retail sales reports to closely monitor to make any sort of decision over the health of the UK economy.
Is the Bank of England actually dovish or hawkish? Because the last I checked, they were talking in very robust terms about being willing to firm up interest rates. But what would inform them to do that, given all the risks that are out there in terms of a possible recession? And they said that themselves, if Brexit should turn out to be ugly.
Yes, I believe that the Bank of England head, Mark Carney, still, has the title of the unreliable boyfriend, and this is one of the themes that have actually made investors take anything the Bank of England says with a pinch of salt. Yes, previously the central bank was hawkish, but a few days back it seems that the central bank is dovish. They've expressed concerns over Brexit. They've even forecast that UK economic growth is going to come to a complete standstill in the second quarter of 2019. Now, this is something I'm not looking forward to. I believe markets still expect that the central bank will actually move forward with cutting interest rates sometime this year, but this will be dependent on the Fed making a move first.
And then the European Commission has downwardly revised economic growth for the EU in both this year, 2019 and 2020. And it seems as though the big drag is coming from Germany and Italy. What are the fundamentals of these economies? I mean, why do they seem unable to grow at any decent type of level after so many years of quantitative easing?
Yes, when we look at the euro area, Europe has been branded the weakest link in the global arena, and this is quite serious. Looking at the economic fundamentals of Germany, the nation is facing many headwinds. Consumer confidence is spiraling downwards, manufacturing production is a cause for concern, and overall sentiment in Germany is very negative. Now, when we also factor in that Europe remains in Trump's trade war crosshair, and there's still a risk of him imposing auto tariffs in November. This is a major risk for the German economy, which exports cars. Now, if the largest economy in Europe is facing so much headwinds, the other body of the European economy is going to take a hit. And we're seeing with Italy as well. Italy's ongoing budget tussles with Brussels is a headache to investors.
Yes.
There's concerns that Italy may face a potential debt crisis, which spreads across the whole of Europe. So while the euro in general has displayed resilience against the dollar and other currencies, I don't think it deserves its current valuation. I think the euro should be much lower.
Okay, so now we've spent a bit of time on what's happening in Europe, mainland and the UK. Let's focus on South Africa just very quickly and emerging markets more broadly. When we spoke last week, the South African rand had pushed through 14 against the US dollar. But since then, it's lost those gains, now trading around 14.17 thereabouts. Is this largely a reflection of what you've seen happen with emerging market currencies in general? And how might the Fed minutes due out later today? And not only that, obviously, the fact that now Jerome Powell has come out and said that, hey, we are signaling that we're going to cut. How does this now feed into emerging market currencies?
Yes, it's been a roller coaster a few days for the South African rand. I remember a conversation last week. The rand was knocked lower last Friday thanks to the Goldilocks US jobs report that tempered rate cut expectations. However, if you look at the rand's valuation today, we are seeing a change of fortune as the rand has strengthened against the dollar. And this was all thanks to Jerome Powell reconfirming market speculation of a Fed rate cut. Now, this evening will be very significant for the South African rand, naturally because the FOMC minutes will also set the stage of what to expect from the Fed in H2. If we do have a situation where the Fed the Fed minutes echo a similar tone to Powell, and it's quite dovish. The rand has scope to appreciate and stand tall against the dollar as the week comes to an end. But another thing we have to keep in mind is we still have economic reports from South Africa tomorrow, which will be quite significant. We have mining data and manufacturing production, which should offer insight into the health of the South African economy.
Absolutely.
Now, yes, if these reports do exceed market expectations, this could be another good week for the South African rand.
That was Lukman Otunuga. He's a currency and market analyst at FXTM.